This is the weekly review for the week of May 9th to May 13th. So, starting off with Euro, my bias going into this week was bullish, as I said in last week's Sunday preparation video. Um, we formed this daily range here, and I felt that we could retrace into premium of the daily range before continuing to sell off. So, that's why my bias was bullish. We had just several consecutive days of selling, so I thought it would be logical to expect price to retrace into premium of this range. That obviously did not happen here. We basically just consolidated and moved within a small range in discount of the larger daily range here. So you can see this is equilibrium, and we just consolidated in discount before completely falling off on Thursday this week. So trading on Monday, both EU and GU gave us bullish setups. So GU was the one that had a raid of Friday's low, previous day low, which was also previous week's low. And we had a SMT with EU on GU, and then EU had a SMT with GU and DXY. Um, and both gave the same mentorship setup, even though the structure of the candles was not like super clean on either of them. Um, just with this FVG here, small breaker, and both of them kind of got violated. The setup ended up working out um, for both pairs. And I mean, logically, because it was a raid of high time frame liquidity with the SMT, I believe it would be logical to take it. It's just that I'm noting the setup, the structure of the breaker and the fair value gap was not as clean as I would like it to be. But both of them ended up running up in New York session. And originally for EU, I was looking to long a retracement, specifically in this M15 fair value gap. But what ended up happening was GU ran previous day's high, and we had a SMT with EU and DXY and displacement off of it, breaking M5 market structure. EU didn't have a raid, but again, since it had that SMT and displacement down, that's what got me short-term bearish. And because there was no real setup forming on GU, I was monitoring both of them and looking for a retracement into a fair value gap. And EU was the one that gave it. And I was just looking to target sell side liquidity in discount. So the discount being from this low here to this high, just this price swing on the H1. And my targets were these lows and then potentially the top of this fair value gap. And what ended up happening here is my entry got swerved. I put it at the second fair value gap, and we only entered, or we only wicked into the first one. And the reason for that was just RR considerations. So this one was a bit tricky because here's the top of the M5 fair value gap, the second one, but at the same time we had this M15 fair value gap, right? And that's the top of that one. Now we didn't have an M15 break in structure. So when I was looking at this live, I was just basically debating where I wanted to place my limits. Did I want to place them based off of this M5 or the M15? And because I ended up putting my stop loss above the M15 fair value gap, that's why I decided to place my limit on the second M5. But if you just use the M5 one, the second M5, and entered on the first one here, you would have had a decent 1 to 6R trade if you targeted the top of the fair value gap. If you just targeted these relative equal lows, it would only be a 1 to 1 trade. So not the best RR, but in terms of the logic behind the trade, I think it does make sense to me. So even though we had a bullish bias, we had this previous day high raid on GU. Even though EU didn't raid anything, we had that high time frame SMT, and both of them had displacement. And then it was just a matter of looking at EU and GU and which one gave a retracement into the fair value gap. And here we had a nice short-term trade. And what ended up happening is we went back down into this fair value gap, M15 fair value gap, that I was originally looking to buy in. And this is also in OTE of this price swing. To be honest, live, I wasn't looking to buy this anymore. I just wanted to take this sell and be done with it. And realistically looking at it, even if I did get this sell, I wouldn't really be looking to buy this because we had bearish structure here. I just don't see the logic in why you could sell this and then buy this back expecting this run up here. Again, even though I was bullish, the fact that I saw this intraday bearish confluence just made me not want to long anymore. So yeah, I wouldn't have taken a long here anyway, or flipped long here if I was able to get short here. So moving on to Tuesday. Tuesday I was looking to long again, and we had a nice raid on EU with these equal lows here. So what I was noting on the chart was that anyone that was long on this run up here would have put or trailed their stop losses below these equal lows, and London just nicely created even more equal lows before trading up, and then we rated it in the interim session. So this was definitely really nice, lots of liquidity below here, and I was originally looking for a long, but just the structure of this mentorship setup, yes, we had displacement here. The break in market structure is not the greatest in terms of a big, as ICT says, a big beefy candle closing above the swing high here. But then you have the breaker sitting up here, and then the two fair value gaps all the way down here. So I usually like when they overlap. And on GU, we did get that. So I ended up taking this setup on GU. We had a similar relative equal lows being rated. And then here we had the M5 breaker overlapped with the M15 fair value gap. They're much closer together. And you could see this break in market structure here. Look at this big, violent move up, closing above these swing highs compared to this. So I felt much more confident taking this trade up here to the low-hanging fruit. And we did have an Asia raid and this M15 breaker, so that's why I just wanted to target the low-hanging fruit liquidity and be out of the trade. And also, DXY on Tuesday had some type of equal lows, I believe. Yeah, these ones that I marked out. So DXY also had equal lows. The problem was you could see EU, or GU rather, just consolidated here. So I ended up cutting the trade at break even, and that was a good idea because obviously we could see in hindsight I would have eventually gotten stopped out. But EU did take the low-hanging fruit if you were to hypothetically enter here on the second fair value gap. And this would be the low-hanging fruit trade. So yeah, GU was cut at break even. And then after reviewing Tuesday's price action, I saw this short. I wasn't looking at this live because I had that bullish bias and I was kind of probably ignoring everything, any like short indication. But this was a very clean short in terms of we had a raid with SMT. Now this wasn't a session high raid. Um, I guess you could consider this the New York interim high. But the fact that we had the nice H1 raid with displacement inside of Fair Valley Gap with SMT, I think this would have been a very clean trade if I had had a bearish bias. Nice breaker, Fair Valley Gap overlap, and then you could target the low-hanging fruit here, which also made relative equal lows with this interim session low. So this short was actually very clean here in hindsight. Moving on to Wednesday. So Wednesday was CPI news. And I ended up taking a trade again on GU. And the reason for that is just I didn't see an entry on EU. So EU had a very, very clear market maker sell model here with DXY having a very clear market maker buy model on the M5, with this being the original consolidation. And then we had the SMT here. That was the dead giveaway. EU, GU, SMT, where EU did not raid the previous day high, where DXY rated previous day low, and GU rated previous day low as well. Or previous day high, I should say, for GU. So even though EU had this very clear market maker sell model going on, this entry here was not in a kill zone, 6 a.m. This is interim session. So I start looking at 7 a.m. because I just trade New York. And we really just had this consolidation, and there was no PD arrays to enter. Where GU did not have the cleanest market maker sell model, but what it did have was the mentorship setup with the confluence of the EU market maker sell model and the DXY market maker buy model. And here we have this PD array M15 fair value gap to enter on after a previous day high raid with displacement. Now, yes, this displacement is not a big candle breaking this market structure, but the fact that we had all of those other bearish confluences is what made me confident to enter in here. And the reason I put my stop above the previous day high instead of the M15 fair value gap high was just because of the news. I just wanted to make sure I wasn't going to get a stupid candle wick to take me out here and then continue down. But I ended up taking a partial below these relative equal lows, and then these relative equal lows down here, I closed the position. So Wednesday was a very, very clean trade for the CPI news. It was really, I mean, in my view, it was a very, very obvious trade with just so many confluences. The SMT, the market maker models, the displacement, it was beautiful. So in terms of bias, I was actually not expecting this to retrace the move. So I thought we were going to come down, take the equal lows, and then reverse and go higher. Again, because I still had the bearish bias on the week. So I ended up taking this EU long as well because we had a low time frame SMT here. We took major liquidity below these equal lows, rapid displacement up, and I entered in on the breaker. Now we did not have a fair value gap here. I just ended up entering on the breaker because I had a high confluence that, or a high belief that this London high, or is this London high? No, it was interim session high. So this interim session high would be taken. This was the low-hanging fruit, and that's exactly what we did. But I expected this to continue going up to take these equal highs up here. But I just simply always exit at the low-hanging fruit just because I'm a new trader and I don't really want to be holding positions that long. But we ended up retracing this, which I did not expect at all. And that was just, and obviously hindsight, because we just ended up consolidating the whole week. Thursday for EU, we really had nothing in terms of setups. I did take a trade on GU on Thursday where I took a loss. Let's see here. Yeah, so Thursday in my printout here, I note that I abandoned my bullish bias just because we had this very violent breakdown of EU. So I was looking for shorts, and because EU was not setting up anything, I turned to GU. And we had these relative equal highs here. And what I was basically anticipating was that we were going to raid these highs in New York, go above the 12 a.m. price, and then break down. And that's essentially what ended up happening. Now, we also had a EU and DXY SMT where they didn't take out their respective London highs and London lows. So everything was very, very nice about this setup. The only thing was the break in market structure. It was not the cleanest candle. We had a very nice wick down, but we can see that it almost closed as a raid. But due to all of the other confluences for bearishness is why I ended up taking it. And the trade, in fact, ended up working out over a 2-day period because I put my stop above, typically, again, the second fair value gap high. But we ended up raiding that, still not taking out the raid high. Obviously, the raid high being the true invalidation. And as you can see here, I was targeting the London low because my logic was we took out London high, so the next logical liquidity would be London low. I mean, also this New York interim low, which we did end up taking on Thursday. But to take the London low of Thursday, that didn't happen until Friday. So, to be honest, I don't think there was anything wrong with this setup that I took. Really, the break in market structure here was the only thing that I didn't really like. But really, the fact that price played out exactly as I anticipated, rating these highs, going above the 12 a.m. price into a premium, and then breaking down aggressively. I liked all of that, and that's why I got into the trade. And it just obviously didn't end up working out because this was one of those rare instances where we took the fair value gap high. I'm trying to keep a Excel spreadsheet to see how many of these mentorship setups price takes the fair value gap high and it reverses and it goes to TP to see where I should put my stop. But the thing always is putting the stop above the rate high just really eats at your RR. And from what I've seen, you're really putting the stop above the rate high gives you between like a 1 to 1 RR to like 1 to 5 RR max. And ideally, I'm looking for like a 2 to 3 R trade because obviously you have the trade-off between the lower R trades and a higher strike rate versus the higher R trades and a lower strike rate. So if I just take 1 to 1 to 1 to 5 R trades, I have to be right many more times than if I take 2 R to 3 R trades. So I think this was just one of those conventional losses that you're going to take with the setup, the mentorship setup, that is. So yeah, moving on to Friday. So the long on EU for Friday and GU were both very clean, but Friday, I was just not really focused on the charts. Um, we ended up having this sloppy raid in Asia, and I say sloppy because this is not like a V type of reversal trade. Um, like this is normally what I like to see in a raid, down and reverse. Where this was just kind of choppy, and then yes, we did have displacement, but the reason why I didn't end up entering this short here in the H1 fair value gap was because we had this raid in SMT bullish. So I was just really confused of what was going on here, and I just completely ignored this trade. Same thing for British pound. We had an Asia high raid, H1 break in market structure. There was no SMT here either, and we went back up to the breaker fair value gap and targeted the equal lows that we formed here and previous day low. Now, for me, the short was not as obvious, but the long that came after, when I looked at this in hindsight, this was, for me, basically a free money setup. Basically because this is a Friday, and we formed the low of the week here. So just based on the weekly open, high, low, and close structure, if we're here at 9:30 a.m., right, and it's on a Friday, and this is making the low of the week, it's highly likely that we're going to have a retracement higher to form the close of the weekly candle. So that's what we end up having here with this displacement. Boom, right here to the breaker fair value gap. We see the overlap here. This is exactly what I like to see. And then you would target the low-hanging fruit liquidity. You could target London high. EU didn't end up taking London high where GU did. So it really just depends on the pair. But yeah, both of these Friday setups for EU and GU were absolutely fucking clean. Unfortunately, though, I was just not on the charts at this time. The Sunday preparation now for EU. So the only thing I really see on EU for going into this week is us potentially retracing into this daily fair value gap. We also have a H1 fair value gap here, and then rolling over to take the 2017 low, and then there's a monthly fair value gap below here. There really is no major liquidity or liquidity in general near price right now besides Friday's high, where we have these relative equal highs, and then Friday's low. We already took Thursday low, and then Thursday high is all the way up here past this daily fair value gap. And I feel that if price is bearish, we don't need to go beyond the fair value gap. We're just going to come up here to the mean threshold and then potentially form a low time frame mentorship setup and then roll over. So yeah, really just going to wait to see what price does on Monday. For NASDAQ, I didn't take any trades on indices, but I did take a trade on US 30, but my bias for NASDAQ and indices is bullish, at least if we break market structure here on the daily time frame. So the main thing that I see here is a market maker buy model with just 3 sets of these criminally equal highs. I really cannot see us nuking lower without coming up. Let's see. Coming up like here, taking out the equal highs and then going lower like that. So we're also in a monthly order block here, and we have a SMT with this monthly low, which is also the yearly low for 2021. S&P and also US 30 did not take their yearly low. So far we're looking good in terms of forming a smart money reversal around here. Oh, I still have the brush selected. The only thing we really need to see now is a nice displacement candle above here breaking market structure, and then we could potentially return to this breaker. So that's what I'm going to be watching for on NASDAQ. And then Bitcoin. Bitcoin obviously has been all over Twitter. We completed the market maker sell model. Now, logically, what I see happening with Bitcoin is price coming back up now to take this monthly liquidity. So we took monthly liquidity here, and ICT says now, right, so we took sell side. Logically, the next target would be buy side. And the next, or the closest buy side liquidity on the monthly chart is this 48,000 level. And then we also have that fair value gap in here. Oh no, the fair value gap is on the weekly time frame. Right here. So yeah, we'll see what happens. I'm not trading Bitcoin, but I just want to see in the future if my logic is correct, that we're going to now come up and take this buy side liquidity up here.